To build anything that truly lasts, it takes time.
Understand what the macro setup is looking like, especially because of the developments that we are seeing on the tariff war front. We are now joined by Mr. Hugh Johnson, Chairman and Chief Economist at Hugh Johnson Economics, now joining us. Sir, thank you so much for taking your time out and joining us here on ET Now. Every day we have some or the other announcement. Today again, Donald Trump has announced, or rather proposed 35% tariffs on Canada. Given the macro challenges that you're facing and the outlook for interest rate environment for the next few months, how do you view the macroeconomic landscape and what impact will this have on the American market?
Well, you can obviously see that it's extraordinarily volatile, volatile and unpredictable. I mean, it's one thing that's a characteristic of what we're seeing today is the same thing that we saw in 2018 and 2019 during the first Trump administration or the first Trump trade war. And that's an on again, off again sort of phenomena where you have tariffs that are levied one day and the next day they're reversed in response to a decline in the market. So we're seeing pretty much the same thing, which means I'd really come down to the bottom line, which is this is going to be an extremely volatile, and I like to call it, let's call it a volatile and trendless market. There'll be good days and there'll be bad days, but I don't think that you can say this is the start of a new bull market. And I don't think at the same time that this is the start or we're in line for a bear market. Trendless and volatile is probably what you're going to see for the next month or two in response to an extremely volatile public policy from the US or from the Trump administration.
Okay. Hi, Mr. Johnson. This is Kanishka also joining in. I wanted to ask you about the tariffs that have been proposed for Brazil and also on copper imports, that 50% tariff that has been announced by Trump. So how do you expect that to affect global supply chains, especially in manufacturing and commodities segments?
You've got, this is starting to shape up or to sort of mirror what happened in 2018 and 19. And what you're about to see, of course, we're starting next week, when we start to get in U.S. inflation numbers for the month of June, you'll start to see some real these the impact of tariffs, the increase in prices start to creep into the dialogue, creep into the numbers. You'll see that in, for example, the consumer price index, which will be released next week, should show a 0.3% increase. 0.3 doesn't mean much, but the year-over-year number is probably going to be a little bit unsettling and will again indicate some of the impact on tariffs. The second thing that we're starting to see an ongoing, but we're starting to see the decline or the contraction in U.S. consumption. Consumer spending is not very, very good. And when we look at the second quarter, although I'll tell you the number for the second quarter looks like it'll be okay, like 1.8%. When you compare it to the first quarter, which was only 0.5%, it's still the case that consumer spending is slowing. So what I'm really saying very, very succinctly is that we're starting to see, or we're going to see, numbers over the next couple of weeks, which will show you the impact of tariffs, and they're not going to be pretty numbers.
So that's as far as the macro setup is concerned. But if you track the oil market very, very closely, we have several developments that have come in over there as well. OPEC Plus is expecting demand from China to slow down, and China being the biggest importer of Brent crude, that is likely to weigh heavy on Brent crude prices over the next few months. How do you view this setup, especially in the landscape of tariffs, and what kind of impact will that have on the oil market?
Well, the oil markets, if you talk about something that's unpredictable, the oil market is probably as unpredictable as anything. I think we're in a period, and when I say a period, I think 2 to 5 years where we're going to have declining oil prices. Not significantly so, but that will be a reflection, I think, of economic conditions throughout the world, which are really going to be, quite frankly, we're going to see the shift from, quite frankly, from oil to other non-oil commodities will be the primary drivers. There'll be a lot of volatility around the numbers. So I'm talking about a $70 to $75, maybe a little bit less, equilibrium price of oil with a lot of volatility around that number. And of course, for the time being, when we're starting to see a slowdown, not only from China, but a slowdown in the US, the US economic growth is likely to become somewhere around the 1.3 or 1.4% number for 2025. That's down from a 2.8% number in 2024. So the US is slowing. That'll slow in the second quarter. It'll slow in the third quarter. China will slow. The European Union will slow. Everything is more or less in the process of slowing. And quite frankly, that'll show up in the price of oil, but it'll also show up in just general conditions. Again, I go back to the first thing I said, which was a trendless and volatile market environment. And I think that's really what you prefer. It's going to be very hard to make money, and especially because our valuation right now in the U.S. markets is a little bit high. We're about 3.5% overvalued, or over the level I think we'll reach in the fourth quarter of 2025. It's going to be very, very hard in this kind of an economic environment and earnings environment. It's going to be very hard to make money in the equity markets. Be patient, though. Every investor should understand that, as was the case with all of these very difficult periods, at least in my lifetime, all these difficult periods are followed by better periods or an emergence. And with some patience, in time, you'll be just fine. You'll make money in the equity markets, but you've got to be patient. You can't jump the gun. And if you go in now, you'll be jumping the gun, and it's going to make it more difficult for you.
Okay. All right. Okay, so that's the view coming from Mr. Johnson. Be patient in this kind of a volatile market. Thank you so much, Mr. Johnson, for joining us this morning. Great chatting with you, and thanks for helping us understand the global market setup. With that, we'll let you go.